Hello and welcome to this episode of Next Sell Over. I'm your host, Jenna Moser, Fractional COO and Strategic Growth Partner. In this podcast is where we get out of the weeds and talk about what it actually takes to grow a lean, high profit business. Today, I'm excited to be joined by Josh, COO at Ecom Financial Services, an agency that provides fractional CFO, accounting, and financial services, who's also helped some pretty cool businesses like She's Birdie, Neurovice, STEM Regen, and more. So, Josh, thank you so much for being here. I'm really looking forward to having you.
Thanks for having me.
Yeah. All right. So let's just start with the basics. How did you guys get started? How big is your team? Tell me a little bit about Ecom Financial Services.
So Joe and I met at a previous fractional accounting firm, and while we were there, we had realized that there was a huge gap in the market in the fractional space. And the books that we were seeing that were coming across our desk were just, it was a disservice to the founders. And Joe and I were both very passionate people about, what we do and adding value to the team. We saw that, look, there's a need out there. There's a need for people like us who are actually committed to the company, not just from a credit and debit standpoint, not to get technical with the accounting verbiage, but we're in it with them to grow. We're in it with them on an efficiency level, which is actually counterintuitive when you think of it from a business model perspective, because it's like, why obviously fractional, so we bill out at an hourly rate. So it's like, why would you want to be more efficient? Because you're obviously reducing your own hours, right? But we realize the value it brings to the company, right? We want to be a member of the team. It's not, we're not here just to cash a check. Yes, it's a business. We want to grow the business and we want to expand the business. But every client that we're with, it's like we're a part of the team. And we actually say that to the clients. Now, we never push ourselves in to the team, obviously. We stay back and we let them bring us in, but we really try to send that message is that, we're not just here to, you know, post entries in QuickBooks. We're here to reconcile your balance sheet. We're here to give you strategic advice. We're here to give you recommendations. We're here to look at, certain things and be like, something doesn't make sense here. Let's go back to the drawing board, maybe look at it from a different viewpoint. Let's look at your forecast. Let's look at your cash flow, things like that.
Sure. Yeah. No, I love that. How big is your team? Is it just you and Joe, or do you have a team of people that help you?
So right now it is just me and Joe. We actually have a team of people. We're just waiting for the right time to bring them on.
Gotcha.
So basically we have some internal decisions to make. It's not like, you know, it's not like anything grand, but one thing Joe and I have always tried to do, and given the fact that we are in the fractional space and we see a lot of startups, and I guess to some extent you can consider us a startup, even though, we're not really a traditional startup in the sense we're just a new company. So, we've really tried to stay ahead of the curve. So basically, a lot of that, we don't want to be, paralyzed by or paralysis by analysis, if you will. But we definitely want to have strategy behind every decision that we make, because we realize that the people that we bring on, that we hire and staff, we're hiring them, yes, for credentials, but we're also hiring them for who they are as a person,
Sure.
right? Because we want them to have that passion. We want them to have that drive, right? So it's like, for example, we'll have some clients where we just do, day-to-day bookkeeping. And, I would say, not to sound egotistical, but my knowledge is, at the CFO level. So, that's day-to-day tasks, whatever, things like that. But what you're getting is somebody who cares so much about that,
Hmm.
that I'm committed to giving you the best bookkeeping that you can possibly get. And that includes balance sheet reconciliation, that includes chart of account cleanup, that includes everything, full overhaul. And it's like, it it's mind blowing, like the amount of books that come across our desk, so I've been at this for about 5 years now, and it's like you look at the balance sheet and it's like these fractional accountants who are supposed to be helping, or they're doing a disservice because now Joe or myself have to come in. We have to basically strip it down and do a complete blow up, which is a ton of hours. And then when you start looking at it, you're like, if you would have just came to us from the start, you would
Yeah.
have saved a tremendous amount of money, a tremendous amount of money. And we're not expensive. We're under 60 per hour. So I mean, most fractional accounting firms out there are gonna have some kind of tiered pricing system. Nope. You're gonna get Joe, Josh, and we have the two people in the wings who are very similar to Joe and Josh. So, I mean, this is basically it. EFS. I mean, I wear this on the calls. I mean, it's, you know, we're, we're fun guys as well. I would say, our personality is a little bit different than most people in finance and accounting.
Yeah.
So, a lot of times, look, let's be realistic. Finance and accounting is rather boring. And, with stupid little jokes and stuff like that, we can make it interesting. We can make it fun. And sometimes that's important because getting that engagement from the founder can go so much further for the
Sure.
founder's company.
Yeah.
It's not even just for us, it's for them, right? So, I mean, yes, we're a little goofy, but
No, I think that makes it fun. Like, I'm a CPA by trade, like, I did that in the corporate world, and so I definitely you get that, like, stereotype of, "Oh my gosh, you're in accounting, like, you're so boring, like, no one likes you," but, like,
yeah,
you can be cool and
exactly.
fun, like, and still
Yeah,
still love
yeah.
numbers.
Is your background Big Four or
No, I did a regional, a public accounting firm, and then I left and did internal audit at a manufacturing company.
Gotcha, gotcha. Okay, cool, cool. So corporate finance as well, and that's one thing that I'll say that separates Ecom FS or Ecom Financial Services from a lot of the other fractional accounting finance that we see is that there's a difference between corporate finance, and you could probably, speak to this as well. Like when somebody hears the word CFO or controller, they just assume that it's the same and it's not. It's like if you go the big four route, yeah, you're probably gonna know technicality and run circles around from an accounting standpoint, like traditional CPA accounting. But when it comes to gross profit, reading margins, understanding cash flow, what the business actually needs, the value and stuff like that. Yeah, we could do the credits and debits piece, but we also understand the corporate finance piece, which, to be honest with you, I think is a huge gap in the fractional space. And I also think that, look, it seems like any and everybody with a accounting degree or some kind of accounting experience is in the fractional space. I mean, to the point that we engaged with a new client and I looked at the balance sheet and I was like, why is it negative? Why are your prepaids negative? And it was basically the accountant was accruing, but just didn't even care to hit accrued expenses, a liability. So you have this negative asset on the books right now. Keep in mind, right? Like we're dealing with people who are VC backed or PE backed or some kind of investor backed or something like that. So it's like, of course, the P&L is important, but if you're not paying attention to the balance sheet, like it just looks sloppy. It's not professional. You don't have reconciliations, and then come to find out, it's like we have terms with it was a vendor and it was like we have terms with them. So I was like, "Oh, so we need to be accruing this, not negative prepaid." Like, so I mean, that's what's out there. It's kind of scary, but you know, we are actually committed to being the best that we can actually be on a daily basis with every client that we work with. And we try to help on every level possible, even outside of finance and accounting.
Yeah.
Even if they're like, hey, can you recommend like a marketing, or does one of your clients use this, or does one of your clients do this? It's like, yeah, this. You know, we'll never force a hand, obviously.
Right.
Now, if somebody obviously came to us and said, make the final decision, if we're part of the team, I mean, obviously we would discuss that depending on if cash flow is involved or not. But
Yeah.
yeah, I mean, we go to whatever lengths possible. We have a client who's actually I live in Fort Lauderdale. We have a client here in Miami. I have a date set up to go down there and meet with them and actually see. So it's like we're like, I know we're in the world of 2025 where it's all virtual, which a
Mhm.
lot of our obviously client engagements are virtual,
Yeah.
but we will take those steps. It's like, Miami, yeah, it's 30, 40 minutes depending on traffic, but hey, bud, I'm coming down to see you.
Yeah. There's something to be said about those, like, yeah, like, people who are willing to, like, make that effort and,
Well,
think
like, to be honest with you, like, let's be realistic. Like, and I don't want to get too far off base with sports because I played sports and sports is really like close to my heart. But it's like when you're in it with a team, like to equate like a sport, you're all trying to strive towards something. And with that momentum, you can create tremendous value. When it's just some guy over here clicking buttons in your QBO, what is that really gonna do for you?
yeah.
I mean, sadly, we take on clients that the checking account isn't even reconciled. Like the main checking account, like at the very basic. And just a full transparency, we push for a hard close every month to the best of our ability. Because keep in mind, we're working with startups. So we press with true reconciliations, meaning that it's not just an export of a GL, it's actual supplemental information to support what's on your balance sheet. So you don't have a surprise write off, or you don't have to explain to some investor why 3
Right.
months ago your books look great and now all of a sudden they look horrible, right? That's so we push to have that because
Okay,
let's
very
be
cool.
realistic. There's a lot of focus on the P&L. We get it. We understand that,
Mhm.
but the heart is the balance sheet. It's not meant to hide and stash things. And
Mhm.
what happens is without reconciliations, you know it, things just build. And then the next thing you know, Josh has to be the bad guy.
Yeah.
Sorry, I have to write off this 150,000 because it's just sitting on your balance sheet for the last 3 years. I don't know what your account was doing, but obviously
Yeah.
wasn't looking at it.
But, like, part of it's, like, educating them, right? Like, if you don't know, you don't know, and so, like, it's also on the business owner to, like, understand what
So
they're hiring.
you are absolutely right. And that is honestly, if I'm gonna be honest with you, that's probably the most satisfying and rewarding part of being a consultant. Not being, like, educational or anything like that. It's that light bulb moment where the founder or whoever the point of contact might be, because sometimes our point of contact might not be the founder, right?
Sure. Yeah.
And when that light bulb comes on and they see it and they're like, "Whoa, I get it." And
Yeah.
then they're like,
What have I been doing?
100% go full blown because I don't want this to happen again. And it's so rewarding because it's like, wow, you know, 5 months ago, your guys' books were here. Your process was this. And look at where we are today. Not only are your books 5 times better, they look 5 times more professional. You have a reconciliation for every balance sheet account that is explanatory with the supplemental information that we have. So it's like, and we've installed processes to make things faster.
Oh my
So it's like, I mean, it's like, how do you lose in that situation? It's like, wait a minute, these guys came on and basically counterintuitive their own business to make our business better? Because that's what Joe and I care. I mean, we care because at the end of the day, like I said, I mean, like, why else would you want to be a consultant? Why else would you wanna be a consultant? It's to educate people. It's to help people. It's to add value. It's not just, "Hey, yeah, let me click buttons in QBO." Yes, we could do that. If that's all you want us to do, that's all we'll do, and we'll be happy to do it. But like I said, we are going to be dedicated, and we're gonna make sure that we're not making any mistakes, and there's gonna be a hard reconciliation every month. And, like,
yeah.
other people who are just hired as bookkeepers, let's be realistic, that's not happening. Yes, they may be clicking buttons, but they're not reconciling, right? There's no month-end reconciliation booklet that shows me, bank statement and GL balance, right? Like, it's like, you know how it is anyways. So, I'm sorry, I can talk a lot.
No, you're fine. You answered a lot of my questions. Sounds great. But I was actually talking to someone earlier today that they also mentioned how most bookkeepers just ignore the balance sheet. And she's like, that is like one of the most important parts. Like she focuses on the balance sheet versus, the emphasis,
So,
and I'm like, wow.
founders, I will say the number one thing with founders is they're so struck on the P&L. And dude, I totally get it because you want to show growth. It's revenue. I want to show growth. I want to show all this stuff. But at the same time, you have to remember it's like if you have something wrong with your per units or your inventory or something like that, that's coming back to the P&L. It doesn't just magically disappear just because it's on the balance sheet. So yes, no, you're absolutely right. I'm the same way. I actually, to be honest with you, because I went the corporate route, I don't really consider myself a traditional accountant. Now, Joe is actually a CPA. I'm not. I consider myself more just corporate finance, if you will, but obviously I know accounting, like the back of my hand. But I just don't consider myself a traditional accountant because a traditional accountant to me is somebody who's big four credit debit, doesn't understand gross profit, doesn't understand percentages, doesn't, yeah, they may get the balance sheet reconciliation, like,
Mm,
but here's a balance sheet reconciliation. Anybody can make a reconciliation tied to a number.
right.
What's important is that you understand what's behind the
Yeah.
reconciliation. And that's the issue. It's like, okay, so great. You show me $1 million on a spreadsheet with no real supplemental support here. And then, of course, I go to the founder. I'm like, hey, what's this? They're like, well, that was like 3 years ago. And it's like, great. Hate to be the bad guy, but like we gotta get this off the books. I mean, now again, like then you got to start stressing the importance of this is why the balance sheet's important. This is why it's important to have a good understanding of your working capital. We don't try to push for accrual accounting or force accrual accounting. We try to help them understand the importance of knowing your liabilities and your working capital. Because what happens is, and this is actually a real life example, this actually happened. I'll walk you through an example. Engage with a client. I look at the books and I'm like, something's not right immediately, right off the bat. Founder's like, or point of contacts, like, I think it was the head of finance. He goes, what do you mean? I'm like, gross profit is all over the place. I'm like, do you have like a giant mix issue? Like a mix of product pricing and stuff like this. And he's like, well, yeah, stuff. So I was like, okay, let's take a look at your pricing system. They were using Airtable and they were driving unit economics, which Airtable is a software that is very widely used among startup companies. So we take a look at that, and I start looking at that, and I look and I say, "Hey, if you have all of this data in Airtable, are we able to leverage this somehow automatically to drive an RCNI that you would see in like a big ERP, like an SAP, like a goods receipt, which doesn't exist in QBO, right? It creates a bill. There's no goods receipt, right? So we fully automated this RCNI process from Airtable into QuickBooks. In the back end, I created formulas, automated a three-way match. Now, unfortunately, by doing so, we found out that the unit economics had issues. And that's why the gross profit didn't make sense.
That's so cool, though. You guys
Yeah.
literally do
So,
everything.
yeah, I mean, you really gotta, I mean, that's what we do. We try to leverage the platforms clients use. Of course, we don't shy away from recommendations, from things that we've seen. Look, we've been doing this for 5 years, right? So like the bill.coms and stuff like that, we know some of the softwares that are a little bit better than the others, right? In the startup space, or some that are a little bit user friendly, right? That will make things a little bit simpler for the user, or the approvers or whatever, and things like that. So yeah, we recommend, but never obviously we never force anybody to go on any platform. It's their company. We respect that. And then, whatever they have, we try to leverage as much as possible. And like I said, we try to automate it.
Yeah.
And just like that Airtable story, I mean, I could have easily said, "Hey, I'm gonna spend 17 hours a month and bill you this." Instead, I said, "No, let's automate this, create a true RCNI, a true three-way match, and figure out what's going on with your gross profit." And we found out immediately that there was not a three-way match
And
happening,
just, like, the
which
value
means
in that.
their entire unit economics were wrong.
Yeah, that's
We're
crazy.
completely wrong, and we found this out because of this entire thing.
That's so cool. There's your win. That's so
Yeah, yeah,
cool.
yeah.
Oh my gosh, very cool. So whether it's either like your clients or maybe like just like your and Joe's, for your own business, like what would you say are the most important KPIs or metrics that you guys track consistently or have your clients track consistently? Like what should they be looking at, to like understand their business?
Well, we span across a lot of industries. I know. So, our company name is kind of, to some extent, false advertising. I mean, let's be realistic. I mean, ecom, the word ecom in terms of definition 10 years ago has changed tremendously, right? So it's like, I mean, everybody's selling on some kind of website or internet platform, right? It just depends on like what the back end meat of it is. Like, is it traditional e-commerce, or is it more like life sciences or something like that? So,
Yeah.
did I answer the question? I can't.
So like I guess so then just like generally, what are some of the key ones? And it does maybe it's just like give an example of one of the industries, but like
Like,
what
which metrics to look at? I mean,
yeah,
obviously the first and foremost is, and the king is always going to be cash.
sure.
That's gonna be the first thing. And it's not, it actually goes further than that. It goes to a level of what level of control the company has on the cash. And when I say that meaning, given the fact that, some of these startups have a pretty big head count, some don't. And with that comes, the Brex or the ramps and the multiple card usages and stuff like that. And that's where you start looking at, well, your cash and your burn rate is high, or and your run rate or your runway is not that long. But it's like, at the same time, what level of controls do you guys have in place? Everybody just has cards, right? And now it's getting that trickle down? How do you get them to understand the importance of cash? And look, you worked in corporate America. I worked in corporate America. I had to get people the same way, whether it was the engineer, manufacturer, logistics person. I had to get them to understand the importance of finance. Well, even when I was an operations controller,
Mm.
when I was just basically a cheerleader to the rest of the team, because that's really what I mean, at the end of the day, that's kind of how I was viewed until I kind of, you know, brought them all in the room, started creating budgets, started creating the autonomy and responsibility for something. And then it was like, you explain it now
Yeah.
because you're now responsible. You're now accountable. And that's usually the first obviously thing that we look at. What level of control do you have on your cash flow?
I would say that's, like, almost 80% of our job is to, like, educate first because, like, there's such a gap in, like, knowledge and understanding just, like, how important it is to know your numbers and not only, like, know them, but, like, understand what they're telling you, right? Like, data is gonna like, there's always a story, so it's, like, learning how to interpret the data and understand, like, what is it
Love,
telling you, and then, like, what to do
I
next,
love
right? Like, yeah.
say that. I love that. I love that because this is where I think the difference and the misunderstanding is most people just say the word bookkeeper. And then that's completely fine. Like I don't get offended by it. You could call me whatever you want. It doesn't matter to me. Like a title's a title. That doesn't change what's in my head, right? But the difference between a traditional accountant is they live in the world of actual, where in my corporate life, if I lived in the world of actual, I was getting kicked in the mouth because I was having to explain variances.
Mm.
Because why'd you miss it? How'd you not understand the story? Like you're saying, how could you not understand the forecast?
Mhm.
And it's like, that's the story that the numbers tell.
Yeah.
And that's the part where that's where I really separate the difference and why I don't, it's not that again, it's not that I don't know accounting. That's why I say there's a difference because my entire career, I never was able to live in actual. By the time it was actual, it was too late.
Right.
It should have been in the forecast, it should have been in the budget, it should have been accrued for, there should have been, you know what I mean? You should have known about it ahead of time. There shouldn't have been a bill or a surprise
True.
of some invoice from 3, 5, 6, 7, 8 months ago. That's actually what started the RCNI thing.
Mm.
The founder actually said that he didn't have a matching issue. And I said, "I'm not convinced." And
Yeah.
sure enough, one invoice came in, I think it was, like, August. The invoice came in the month of December. I'm sorry, it was an invoice for the month of December, and that was a smoking gun.
Yeah, crazy.
Sometimes you need that actual evidence
Yeah.
as a consultant to, because look, at the end of the day, look, again, we're not forceful, it's not that. We're here to bring value. Yes, we can continue to tell you something doesn't look right with your gross profit. We can continue to look to the level you want us to look, but we're not just going to go off on like a wild tangent, bill you $30,000
Yeah.
and be like, "Hey, we figured out your gross profit." And the founder is like, "Well, I didn't ask you to do that."
Right.
You know what I mean? Like,
Yeah.
right now, we'll push for certain things because of the value, not because of the revenue on our side, because we see that there's a clear issue, right? Like in that case, I saw there was a clear issue with gross profit
Yeah.
just
No.
based off the percentages and the volatility and
Right.
it just didn't look right. And some months it was negative. I mean, it was like yeah, how are you gonna scale this? Like, you guys are
Right.
negative. Like, I realize there's an efficiency curve, but how are you gonna scale this if you're negative right now? I mean, you're already in year 2.5 or something like that. Like, what's going on? We gotta figure that out before anything else. If you can't get positive gross profit, how are you gonna outpace your fixed costs? Like,
Yeah.
you
No.
can't.
That is something I am, like, super passionate about is, like, getting because so many business owners are reactive. They're making decisions in their business reactive, and, like, I want everyone to be making decisions proactive. Like, data doesn't lie, your numbers don't lie. So it's like, the sooner you're able to figure out what's working, what's not, and, like, make those pivots real time, like, you're gonna be able to scale, like, just exponentially because you're not wasting all that time losing money, like, whatever it is, because, like, you're not waiting till the end of the month and getting your, monthly reports. "Oh, shoot, that wasn't working, like, we should have stopped that, after day 2 or whatever." But it's like but you don't know that because you're not looking at your numbers, and, like, that is something I'm very passionate about, like,
Well,
getting people to understand that.
it's kind of funny because I actually have a real life story, to piggyback off of that. Given the facts that my background was in manufacturing, I'm very familiar with inventory. So the previous firm I was in, I worked with multiple industries, but initially I was in a group that was more inventory based naturally because that was my background, right? So one of our clients had a count file that was on a G sheet, and the first yeah, exactly. Exactly. Your eyes said everything. Exactly. That was my reaction. Well, the first thing I said was, "How robust is your count process?" And the founder was like, "Well, we kinda go through and just, and I'm like, "So you're just basically eyeball like doing this?" So I'm like, "Alright, something's not right." So at the end of the months, I'm like, something doesn't make sense with the counts. Like, I'm like, I can see the revenue. I can see the revenue. So what happened to the rest of the quantity that was on hand last month that is not shown in the revenue report? Because your ending balance less revenue plus any purchases, which there's not, or any manufacturing or anything like that. There is nothing like that, but it was a simple equation. It was this minus this should equal this,
Right.
plus maybe some damage, some lost stuff, blah, 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 promotion. I'm like, some doesn't make sense. So, months kept going on. I'm like, something doesn't make sense here. So finally, founder decided to make the decision to go to a 3PL, and then accounts came in and they did like a monthly count, which was like an accurate count, which was a little bit more robust. I had a little bit more trust in it. And sure enough, immediately it was like, we have 150K. We have $150,000 gap
My gosh.
just because of that count on the G, just and that's why it's important to educate. But to be fair to all the consultants out there in the world, some of it is dependent on the person on the other side.
Yeah.
We are fortunate, or I have been fortunate enough to have worked with tremendous people
Mm.
that have opened their brains and not just sat there with blinders on
Yeah.
and tried to understand some of the things and some of the importance and things like that. So I will say that for me and for at least Ecom FS, we have great people that we work with. So we do have that. Now I can see how if, you can only work with what you have. So, I mean, that's why, to be honest, I think that's really what gives Joe and I an edge versus what else is out there because it's not only are we favorable from a rate standpoint. Not only are we knowledgeable from an accounting standpoint, but we're also there to drive it, right? And to push it.
Yeah.
And our personality is personable enough that It's not that we're controlling the room by any means. It just people are more willing to open up because they're like, "Oh, this is just another guy who knows finance and accounting,"
They're comfortable.
versus the
Yeah.
traditional,
Yeah.
"You have to do this 842 revenue recognition robot." Da, 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 like, we're not those guys. Like, like, we'll crack jokes. They're probably dumb. Most people don't laugh. I laugh, but, I think most people are probably laughing at me, not with me. But, but I mean, the reality is, I mean, this is what you're seeing is what you would get if you were a founder like yourself. If we were your client or whatever, and we were doing your books, I mean, if we were on calls, I mean, the personality would be the same. I mean, of course, there's times to be serious and stuff like that, but again, finance and accounting can be boring, and let's be realistic. A lot of founders don't want to deal with it,
Yeah.
but you got to get them to understand why it's important and why they can't just MIA for, 25 days and run up a bunch of stuff on a credit card, right?
Yeah.
So,
Yeah, for sure. So, what advice would you give someone who's like either just starting to scale their business or finally start taking it seriously? What would you say to them?
honestly, I would say the first things that I would do is not get stuck into the trap of finding a CPA. Because what happens is, and even if you were talking about just a small LLC, right? What's going to happen is the person's going to go, I need to talk to an attorney. I need to register this with the state, and then I need to find a CPA, right? There's nothing wrong with that. I'm not saying there's anything wrong with CPA. What I'm saying is that what happens is there's a difference between a tax CPA and a corporate finance CPA, which
Yeah.
Joe is a CPA. I am not a CPA, but there's a difference, meaning usually the tax CPA is just going to make the end of year adjustment and your financials are going to be a mess, which means they are going to provide you no information to make any decisions. You're not going to be able to use it for any kind of historical information for trends, run rates, anything like that for forecasting, anything, because all you're going to have is a mess with the December end journal entry and a tax filing. And
That's a
that's why
big
you come to Ecom FS is to prevent that.
Okay. So, before we wrap up, where can people connect with you, learn more about the work that you and Joe are doing because it sounds like very valuable. So,
Yeah, definitely. So obviously you can find us on LinkedIn. Obviously, personal pages, you could DM us. One thing that I think also separates us from the rest of the fractional people out there is that we always make ourselves available.
mm,
So that means like personal LinkedIn, if you want to send me a DM, fair game, go ahead. Instagram, we're on Instagram. Obviously, we have the website ecomfs.com that explains a little bit more. So, yeah, I mean, reach out. I mean, most of my clients, actually, not most, all my clients have my phone number. And this is a real story just to show you to the level of dedication that we go to. We engaged with a client who was going through funding, and it was in December, and it was like within the first 2 weeks. I sat on a call for 7 hours with the
yeah.
founder on Christmas Eve to make sure that the financial model that was completely destroyed was accurate, up to date, and sound for him to send to my investors.
Crazy.
Yeah.
Awesome. Right, well, that was such an amazing conversation with Josh, and I appreciate you taking the time to not only share your story, but also your valuable insights with us. So, If you got value from today's episode, follow Next Sell Over wherever you listen to podcasts. And if you know a bookkeeper, CFO, or founder who's scaling a lean team and would enjoy this conversation, feel free to send it their way. So thanks again for listening, and we'll see you next time.